Hey, folks, welcome to InTheMoneyStocks.com's verified investing alerts video. My name is Gareth Soloway, Chief Market Strategist right here at InTheMoneyStocks.com. All right, folks, I want to get into the meat and potatoes today. I want to go over the S&P chart. What the heck is going on? We've seen the market going to new all-time highs by just a hair. The question is, did the breakdown that was confirmed get negated? Many people are asking about this. We are going to delve right into the charts and take a look. So let's do it right now, folks. Take a look at the S&P 500 SPY chart right here. And this is just one of those beautiful charts, right? So it's really picture perfect. And the short answer is no, you have not negated the breakdown. Now, for a lot of you guys, you may say this is kind of weird. How could we make a short-term higher high without confirming and negating the breakdown? The answer is very simple. You could see here on the chart. So this is what you have. You have this triangular wedge pattern that goes all the way back to the March 2020 lows. Notice how these two lines have gotten closer and closer together. All right. What we saw here was a fake out here where you closed one day below the trend line. You never confirmed. Confirmation cannot occur on the same day as you close below a key trend line of support. Over here, you did it again. Again, it didn't confirm. Finally, you closed below here and you confirmed. All right. So what that signals is you have now confirmed a breakdown below this wedge pattern. Now, what's remarkable here is that you saw the market rally back up. And interestingly enough, last Thursday, which was this day right here, we had that gap down and reversal in the market. Basically, multiple sources have said that the banks came out with amazing amounts of money to buy the market here. Now, I'm not sure why they did it. I don't know if they're not ready to let us have a big dip yet, but ultimately that did happen and it saved the markets from major downside. There was a lot of chatter that if we had broken this key level and closed below this level here on the S&P 500, you would have seen an easy 10% correction. Now, even though we didn't see that, notice the rally back up. Where did it go? See the wedge pattern and the two trend lines? You went basically back to what would be referred to as the scene of the crime. All right, scene of the crime is the breakdown trend line in this case. We broke down here, we confirmed, and then price went back to that level. Notice how today you're seeing sell pressure. We couldn't get above it the last few days, and I can even zoom in to show you guys. You hit it here, you hit it here. Yesterday, you hit it here as well. You're not closing above, let alone confirming above. So what this tells us is the breakdown could potentially still be in play. And technically, based on confirmation, it is in play. So don't be surprised at a down day today, even on the extreme light volume. I also think it's important to recognize that the last 2 days in the market has seen the lightest volume of all of 2021, especially yesterday, only 30 million on the spiders. Now, today we did even more than that just at this point. We still have about an hour and 15 minutes until the market closes. But again, interesting that the volume has been that light. And by the way, when you see light volume in a market, what it tells you is there is no big buyers there. So you might have seen that from the banks on this day, which got the buyers started, and then the volume just faded out, which means the banks that were buying this market to save it from a big corrective move likely are not continuing. In fact, it's very apparent they're not continuing to buy. Now, you might say, well, why the heck would they buy the market there? I mean, there's so many possibilities. They could have had an arrangement with the FOMC, the Federal Reserve. They could have had an arrangement with some other party. Maybe they haven't distributed enough of their own stock to let the market fall just yet because they know when it falls, it's going to be a massive correction of at least 10+%. Another possibility is the banks did not want to let the market tank into the last week of August because this is the week when all of the executives take their families on vacation. All right. So again, really, most schools are going to begin over the next week or so. And so over this last week, a lot of vacations have been done. And if the market was collapsing, those big executives and hedge fund traders could not go on vacation. They'd have to be glued to their screen because obviously their positions would be affected greatly. So just a couple possibilities. Again, I don't know which one it is specifically, but you have to note this. And again, retrace to the scene of the crime after confirming this technically is still in play to the downside. All right. So that's where we stand on the S&P 500, folks. I really want you to understand this. So many people have said, oh, the market's hitting new highs, so it's not breaking down anymore. Technically speaking, based on that wedge pattern and confirmation, it's still in play. Now, it doesn't mean it can't be negated, right? So with confirmation, just like any technical indicator, it tells you the high probabilities. It doesn't give you 100%. So what we're doing here, we're continuing to watch this market. I want to see where it closes today. I want to see if we see follow through tomorrow on a Friday in late August, or do they float the market back up? And then once we really get into September and around past this coming holiday here, then you should see volume return much, much more to this market, and likely we'll get a more realistic picture of what the heck is going on. All right, we do hear from Jerome Powell tomorrow, so that could be interesting as well. There were 3 Fed presidents that spoke today, all of them talking about tapering, likely starting in October, if not November. The market, though, anticipates that. The question is how much will they taper per month? My guess is 20 billion. So they're at 120 billion right now. Likely you'll see them go to 100, then 80. I mean, it's going to be like 6 to 8 months minimum before they're done tapering, in my opinion. And that's even if they get that far. If you start to see a crisis emerge, if the markets start to collapse, then very likely they'll put the brakes on that, just like in 2018 when they were looking to raise interest rates. The market threw this massive hissy fit, dropping 15 to 20%, and the Fed pulled right back and started loosening again, lowering interest rates. All right, everyone I'm sure out there is interested in Bitcoin. So we're going to get into Bitcoin now, and I want to give you guys a little bit of an update on this. Has it changed? Has anything changed in terms of my analysis? All right, so let's go back to screen share here and show you guys what we're looking at here. So this is the chart of Bitcoin. Let me zoom out just a little bit. Here is your range that we were in for a long period of time. You guys know I called the drop from 60,000 to 30,000. It occurred basically in a week from when I talked about it. I then said Bitcoin would rally potentially, as long as it doesn't confirm below 30,000, you would rally back to potentially as high as 50,000, maybe even 52,500. Well, sure enough, we finally broke out of this little channel here. We then went up. Where did we go? Right to 50,000 and pierced it. Now you can see the market pulling back. Now, again, this is where I'm getting the 50,000 level right here. This is your 52.5-ish level, this upsloping connector. If we go to 52.5, it would be a classic retrace again to the scene of the crime. Just like on the S&P, how the market fell below and then rallied back. So in this case with Bitcoin, it's much the same. Obviously, the chart looks different, but you had the big drop and then eventually you retrace to the scene of the crime. So again, I would say 52.5-ish, give or take a little bit, would be your maximum upside that I'm seeing in the short term. It doesn't mean that we can't pierce it by 500 or 1,000 before we dip. You know, especially on Bitcoin, that's just a rounding error for as volatile as that is. But ultimately, I do not see 65,000 getting taken out, which is the all-time high. I see, before we take that out, likely 20 to 18,000 to the downside. All right. Now, again, what's your time frame on that? I'm looking at 6 months out. Probably within 6 months, we should at least hit that 18 to 20 level. Could be a lot sooner, but I would say somewhere in that range of now to 6 months. I know that's a wide range, but honestly, pinpointing timing on things is the hardest thing. You know, it's easy to say, oh, at some point the markets will have a correction, or it's all about timing, and that's where the charts can help guide you, but nothing obviously is perfect. But that's where I'm looking at right now, folks. I still foresee us going down to the 30,000 level, which will be a lot of, actually, in all fairness, the 41,000, 40,000 here will be a lot of support, then 30,000. And then eventually, in my opinion, you're going all the way back down to this area here. So anywhere in this vicinity, which again is basically 20,000 to 18,000, that is your ultimate buy target. Longer term, is Bitcoin going higher? Yes. Is it going to 100,000? Yes. Is it going to probably 500,000? Yes. I see a huge future for Bitcoin. All right. It's going to get adopted. The printing of money is around the globe in industrialized nations like the US and the EU and in the UK and even in China. It's not going to stop. We're addicted to debt as a globe, and it's not going to stop. So you have to look for alternatives like gold as well as Bitcoin that can suffice and kind of give you protection against the devaluing of currencies over time and inflation. All right. Having said that, I still think there's got to be a washout in Bitcoin. It likely will come, as I've said before in past interviews, with a deleveraging event, which will coincide with the market deleveraging. And again, that will be your big buying opportunity. That'll be my opportunity, my buying opportunity that I'm looking for. Right now, again, if you're going to be someone in Bitcoin that's telling me, hey, I don't even care about where Bitcoin goes for the next 10 or 20 years, then stay in Bitcoin. You don't have to worry about it, in my opinion. All right. You can stay long Bitcoin and just ride it out. But if you're someone like me that's a shorter term trader, well, then why would I pay 40 or 50,000 when I think I can get it for 20 or 18? I might as well wait for that dip, and then I can trade around it and accumulate it at great levels. All right. So that's where we stand on Bitcoin, folks. And again, I really wanted to give you guys a firm update on what's going on here, not only on the S&P and the beautiful retrace we've seen here, which again is still holding the downside potential for this market in the near term, as well as the Bitcoin chart. Bottom line is, I would love to see you at inthemoneystocks.com or follow me on Twitter, one or the other. It's great to be here. It's great to have you guys watch, and I appreciate each and every one of you guys. Take care.